central banks are talking about tightening money. But to this subject, I'd like to just observe we have now in the US inflation officially by the statistics that the government chooses to publish. They test them first and then they publish them. Inflation is running at 5.6 to 6%. Every household in the US knows that lots of prices are going up by much more than 5% per annum. So private economic services, they put the rate of price increases for consumer goods and services at anywhere between 7% to 15% per annum, depending on what kind of a family you have. Do you have children? You don't have children? What is your health care insurance premium, and so forth and so on? So there are lots of things that vary from household to household. But I would imagine prices are going up in the world by between about 7% to 12%. That would be my impression. And then they talk about tightening. In order to get the Taylor rule observed, the interest rates would have to go to at least 6-7% per annum, at least. But they talk about increasing interest rates maybe this year by 4 times or 5 times, 0.25%, maybe even only 0.125%. So that would bring us up to over 1%. When inflation is around 6 to 12%, as I said. So this is a tightening that is only a relative, and the experience in history has been that when interest rates, and they've never been interest rates below the rate of cost of living increases when there were free markets for money. But once central banks were introduced, they kept interest rates artificially low, as in the 70s. And whenever interest rates are negative in real terms, in other words, the rate of interest is below the rate of cost of living increases, or as they call it, the CPI, the Consumer Price Index, or the Personal Consumption Index, the PCE. When that happens, inflation accelerates, period. That is usually the outcome. Now, there can be times when inflation comes down because, say, the inflation is driven often by commodity price increases or by genuine shortages that can occur during war times and so forth. But in general, the rule is that if you have interest rates that are below the cost of living increases, that the inflation then accelerates. And I would imagine that this will be the case. And I can also see that central banks are in no position to adjust interest rates to 6% because if the Fed fund rate is at 6%, the whole system collapses under the weight of interest payments. So we are in this situation where, as Friedrich Hayek pointed out, the more the government plans, the more difficult it is for the individual to plan. Right. And we don't know what the government, and the government, you have to see very clearly, is a tiny minority of people that has no interest whatsoever in what happens to you and me and anyone. Their only interest is in themselves. They are a club a fraternity of people that protects itself against all the other evil people, the businessmen and the workers and so forth. So I think we are in a difficult situation, and it is surprising that stocks are as high as they are in some sectors still, given this uncertainty that is created by these bureaucrats in government. And number two, the larger the government is, and the more they intervene, the slower economic growth rates will be. That is very clear.
Interesting. In your thoughts, Ira?
Oh, it's a really good jumping off point. And I mean, and I'm sure having read Dr. Faber, let's see, I'm doing this for 45 years. So I've probably been reading him for 40 years for sure. I mean, I laugh. They say they're hawkish, right? I can look right now at my screen. The December 22 Euribor, right, which is the equivalent of, well, what we used to call LIBOR, and of course in America with the euro dollars, now we're going to SOFR as the transition is taking place. And, oh, let me look. Oh, wait, December, it's at 99.91. So they're hawkish, and they're the market, and this is the market being directed by them, has now gone from, I can tell you very definitively, we don't have to guess. So it's gone from, since the ECB meeting last Thursday, it's gone from a anticipation of negative 20 basis points to positive 9. Positive 9 with, as Dr. Faber points out, and Richard, you, and listen, we're on the Financial Repression Authority. Nothing says it better. Headline inflation is 5.5%. And we're talking hawkish at 0, or I'm sorry, 9 basis points. This is hawkish. The media needs to be slapped really hard. Instead of always saying, thank you for taking my question, they should stand up and be appalled and go, where should we, there's no word hawkish here. As Dr. Faber says, so if we had a rule and we went to John Taylor and said, okay, where should we be? 6%? Okay, 4%, 3%. Hawkish, there's nothing hawkish, and yet every headline I read, the ECB was hawkish. I laugh. We've lost our collective minds, and the fact that the media genuflects to this powerful crowd, as Bernard Connolly, continually call it Davos, man, and I think that's absolutely right, for lack of because it captures the totality of it. This is preposterous. The Fed hasn't even raised, it hasn't done anything officially yet, except, of course, cutting back, curtailing QE, but they're still adding reserves. I go back to December, and Powell showed me all I needed to know yet again. The fact that the Fed didn't end QE in December was an abomination, because that would at least given them some flexibility. The fact that they cut it, we knew what they were going to cut it. But if they really wanted to start raising rates in any aggressive manner, they would have ended QE. The dollar would have probably rallied, but as we see, the dollar is only going to rally so much. It's not a rally like before, because that's it. And I'm sure we'll get into that. The dollar is a whole nother issue. But don't tell me you're hawkish. The media is it's an abomination that they could absolutely say hawkish. There's nothing hawkish. As I said, if I ran the Fed right now, we would be at 3% interest rates. Either that, or we'd be at 2%, and I'd say we're stalling, we're going to stop here, and then I would embark on an aggressive quantitative tightening program. Not do it like he did it back in 2018 when he did both, because he didn't know how it was going to play out. But if you want to go to quantitative tightening, which nobody seems to want to do, not Lagarde and not Powell, then we'll really get some fireworks in the asset market. So I wish they would do it when Raphael Bostic said 100 billion a month of quantitative tightening a couple of weeks ago. I jumped out of my seat. I said, "Hooray! Great! I know what to do. I'll be very patient, but I know it's not going to happen." So, thank you. There's nothing hawkish going on except probably in Moscow, Sao Paulo, maybe a couple other places, but there's nothing hawkish going on in the world of global finance. So I'll stop.
And between interest rates and quantitative tightening, Dr. Faber, which do you see as being more influential, more of a factor on the financial markets? Is it a bigger factor on quantitative tightening, do you see?
Well, I think that if they did reduce the balance sheet, which would be essentially quantitative tightening, I think the impact would be significant, certainly on the bond market. But I'd like to say one thing, that although I have no high opinion of the current Fed governors, the current monetary policy of printing money, essentially, whenever there is a problem, goes back to Mr. Greenspan. All the economists I read and talk to and so forth, they always say how poor Fed Chairman Arthur Burns was, because he was relatively, during his regime, inflation accelerated. But to be fair to him, he repeatedly increased the discount, the prime rate at the time to 12%. But it was still below the rate of inflation, so inflation accelerated. But if you look at his regime, which began, I think, in 1973 or thereabouts, or 1970, and finished, I think, in 79, he was... it
finished in 76, because after him we had G. William Miller, right?
Yes, correct. Okay. I was just about to say it finished in 76.
Yeah, I don't mean.
But anyway, during his regime, several things were changed, like how they measured the CPI and the personal consumption expenditures. So he's been widely attacked. But compared to today's Fed governors and the Fed chairman, including Yellen, Bernanke, and Powell, at least he increased rates whenever inflation accelerated again. Whereas these Fed chairmen and their lackeys below them, who never opposed the Fed chairman, they just keep interest rates at the low level forever and create a very artificial, surrealistic investment market. And I think they will be punished very badly by the marketplace at some point, very badly. But we don't know when. And the one thing I can say is that Powell, he tried to tighten monetary policies in 2018 and increased the Fed fund rate very slowly. But then in the summer of 2019, in August 2019, there were some problems in the repo market because there was a relative tightening. And immediately they started to print money again, with the result that by the end of 2019, way ahead of COVID, the balance sheet of the Fed was again at the record. In other words, they started to print money, not because of COVID, but before COVID. And then they used COVID as an excuse to print money like there was no tomorrow. And I think that if they increase interest rates, even relatively, and I believe that if the program that they pursue of quantitative easing continues at the present rate, there is a relative tightening of money because the same amount of bond buying per month on a larger and larger government debt and larger private debt is percentage-wise diminishing. And therefore, I'm actually very bearish about the economy. I think that if they start to increase interest rates at the present time, and it's probably the more desirable outcome than to do nothing. But if they increase interest rates here, even in small steps, and especially if they pursue a global monetary tightening, as some central banks have already begun around the world, just not in the US. And Lagarde, she's clueless. Actually, she's not only clueless, she's been convicted for corruption. Now, to be convicted for corruption in France, I guarantee you that you have to be ultra corrupt because the whole country is corrupt. So to get convicted, you have to have, I mean, almost a criminal record, something very bad. And she is the head of the ECB. But this is what society is at the present. We have elected officials that are completely dishonest, unethical, but nothing ever happens to them. They get promoted. And if they retire, they get the same pensions and so forth and so on. And they vote benefits for themselves and privileges for themselves that ordinary people don't receive. That I want to make very clear. We have a sickening system because as long as we had a feudal system and the royalty, if one of the royals misbehaved, his head was chopped off, and he was responsible for things that went bad. Who do you want to make responsible in a system like we have under democracy? Everybody says, well, I'm just doing what I'm told to do. They can take your finger clipper away at the airport. We do what we are told to do. They don't believe in it, but they do what they're told to do. I know a country that always said the same after the war. We were told to do so. Nobody was responsible.
Your thoughts, Ira?
Yeah. Well, so yes, and Lagarde just follows whatever the U.S. does, but that's why she was put there. So I agree. You know, she's a very capable politician. She's a miserable financial mind, and I mean, she's proven it over and over. You know, we go back to when she was IMF director, which was also done under a cloud a cloud of being suspect, right? Dominic Strauss-Kahn, who was certainly capable as an economist and financial person, all of a sudden got removed from the scene pretty quickly. And then we know what the IMF did with under Lagarde's control, which of course was bail out certain European banks. So by bailing out Greece in the way that she did, I mean, so there was a reason that they brought her into the ECB, and she's fulfilled that role. But they are in a very, very precarious situation. And now that Wiedmann is out, but Nagel is in, and he seems a little bit more vociferous, as does Lindner, who's now the finance minister. So she's getting pressure, but she comes out there to her press conferences, and I watch every one of them. And people say, oh, she's hawkish. I kept, as I wrote a blog the other day, I didn't get the sense of being hawkish whatsoever. everything she said to me was dovish because she was busy walking everything back. But if you thought it was hawkish, inside that meeting, the ECB board, there had to be great amount of conflict. That much I know. I don't care what the vote says. I don't care what it write. I have the right here, the policy, the press release. It's a joke. I don't care what it says because that's not what went on there. And of course, Klaus Knott comes out over the weekend and all of a sudden he's more hawkish. So there's a lot of dissension in there. And I think that's what the market's responding to, that she's going to try to hold back the dam, so to speak, because when that breaks, she's going to have an issue of the credit spreads in Europe, the sovereign spreads. I'm looking right now. I just ran them. The French, the German, you peg everything to the Bund. So we look at the Italian, and even the FT woke up yesterday and talked about the widening spread differentials between Greece, although Greece was actually mentioned in the monetary press release directly about how she's going to use optionality and flexibility. Well, optionality and flexibility, let me explain it to all those who really don't understand the way the ECB works. That just means that she's going to override the rules of the capital key, which are supposed to be the backbone of how this all works, right? The capital key, the ECB is only supposed to purchase assets in relation to what your capital contribution is to the ECB based on the capital key. Well, that won't work anymore because as the market attacks what we used to call the pigs or peripherals, the ECB has to change the dynamic because they have to buy more Italian, they have to buy more Greek, they have to buy more Spanish, and those spreads are blowing out regardless, by the way, from where they were. So they've got a lot of work in front of them, but it's all going to come back to me, to Karlsruhe, to the German Constitutional Court, where they're going to look at this again because somebody's going to bring the case. And the fact that the ECB is wantonly and willfully violating the original Maastricht Accord and then the Lisbon Pact about how this is supposed to operate. Before the German High Court bent each way that they could so as not to, during the height of the Euro crisis in 2012, 13, and 14, they played politics with it. But at some point, this is going to change dramatically, and it's going to upset. And I'm very worried because the debt structure in Europe is such that if things start to get unnerved there, and I know this is where Dr. Faber was initially hinting at, but I want to hear more from him about what the bond markets, because if you had a breakup of Europe, to me, you get a massive deflationary shock to the system. And a massive, because of the amount of debt that we're talking about, and it's all guaranteed by the Germans. Because what do you think interest rates in Europe would really be if people didn't want to pretend that the Germans are guaranteeing everything? I mean, I don't know that the Germans understand it, but certain people, the Germans, without the German credit card, rates would be so skewed. Italian rates would probably be 8, 9, 10%. We saw Greek rates, we saw Greek 2-year rates go to 40%, right? Before it all got capped. So we've seen this. Could the world take it? Not a chance. And banks and hedge, they'd all be crushed, and the deflation. And we know, and that brings us full circle, because I know we'll get to the bond market, but the Bernanke, well, I don't know if Greenspan I would put in that camp, but Bernanke and Yellen and Powell, but I would say all central bankers, everybody, they don't fear inflation because Paul Volcker taught them how they can slay inflation. Under the Bernanke regime in 1937, that Bernanke always used as his operative modality, they fear deflation. And they're in such a situation now that fear of deflation, to me, makes me very continually bullish the metals. And people talk about, well, gold went down even with inflation. If you're buying the metals because of inflation here now, you don't really understand the global financial system. That's a reactive. People who are buying gold, and somebody's out there is a massive buyer of gold, by the way, massive, because it tries to break. And this is with interest rates going higher, whatever that means. Of course, we know nominal rates are still probably, well, if we use the overnight rates, I would conservatively say they're 350 to 400 basis points negative real yields. So that makes gold attraction. But I think the gold market is getting nervous that the central banks are going to, as Dr. Faber talked about, going to panic again and set the wheels in motion for, lo and behold, more money printed.
If there were some type of crisis in the European bond market, Dr. Faber, do you see the potential for international capital flows into U.S. equities or precious metals? What are your thoughts?
Well, it's already happened. There is a lot of money that went from overseas into the U.S. Otherwise, the U.S. dollar wouldn't have been this strong. I think that Ira correctly pointed out that Lagarde is basically a poodle of the US, and she will do what she's told to do. That I believe. I also incidentally feel that in the US, the Fed is not independent, but is doing what Biden is telling them to do. And before that, what Trump told them to do, maybe under Trump less so than under other governments. But anyway, I think that in Europe, Lagarde became so-called, in quotation mark, hawkish, because the dollar was so strong and the euro so weak, and that in the eyes of some people is bad for the US if the US dollar is too strong. It's of course much worse for the US if the US dollar is weak, but it was perceived to be a slightly on the too strong side, so they told them you also have to do something. Because the central bankers, they talk to each other every day or every week, or it's not that one does this thing and doesn't check around what to do and so forth. Anyway, I think that in Europe, I'm not so bearish about the southern countries, although they're heavily indebted, because now they had a few years' time to offload the real garbage onto the ECB. You understand? The ECB has some quality standards, but if you look at the bureaucrats that are at the ECB, they wouldn't know what the good quality is and bad quality. So they buy every garbage. And then there is another issue that is the most important issue. The US, which has military presence in Europe, God knows for what, but they have it. And they basically control politically Europe. That we have to be very clear about it. They do not want Europe to fall apart because they're afraid. That was the big issue about Greece. They were afraid that if Greece leaves the EU, Greece will find a happy partner in the form of either Mr. Putin or, even more desirable for Greece, China. And then the hegemony of the United States in the Western world is obviously then challenged. And that the US does not want, period. It's not going to happen. And that's why Draghi said under no conditions will we fall apart. We'll do what is necessary to do. And I think that's still the view, especially now that they have a more difficult partner to talk to. Not that he himself is difficult, Putin, but the Russian economy is doing surprisingly well. And Putin is a surprisingly intelligent leader compared to all the idiots that we have in the Western world. He's a genius. But the media, as was pointed out before, they always talk down Mr. Putin, and everything China does is criminal and bad and damaging. The media in the US is not a trustworthy organization any longer. Very biased, and frequently they publish untruths, things that are simply false. And they portray people negatively that do not deserve to be portrayed that negatively. So I'd say there is an increasing geopolitical risk, and each time the economy was really in a lot of trouble in declining empires throughout history, the ruler went to war over something, because that is the one thing that you can kind of rally people and keep them in control. Fear, as we've seen with COVID. COVID has been created by someone, exactly who, we don't know, but it was happily endorsed by Western weak leaders to essentially keep the population under control and fearful, and to print money. It was used as an excuse to print money and increase the deficits and increase the power of governments. Never in history has it happened that the people were told, you have to stay home, you can't go out. You couldn't even go out in Britain to smoke a cigarette in your own garden, never mind the park. So I'm very negative about society. I think the geopolitical risks have increased. I actually admire the patience of Putin, because NATO, under the hegemony of the US, has broken treaties repeatedly. They were not supposed to enlarge NATO towards the east. What they've done, they've enlarged it. And now they're at the red line. Putin will not tolerate American military presence in Ukraine. The way China would not allow military presence in Tibet and in Xinjiang and so forth.
Mm-hmm. And what about Taiwan? Do you see geopolitical risks there to the economy? And
I don't think China wants to invade Taiwan. They basically control it already economically, but the government, the government officials is a different class of people. The businessmen, they travel back and forth between China and Taiwan, and they do business, and they go and have dinner together and laugh together and drink together. And the politicians, they play kabuki theater. Like the Republicans and the Democrats in Washington, they pretend to, in front of the American people, to be two different parties, when in fact, it's like two different mafia organizations, but they work together. They just occasionally have a dispute. How do we distribute? The government budget in the US is $4 trillion, okay? It's the largest in the world. It's larger than most GDPs of countries in the world. $4 trillion on an economy of, say, 25 trillion. And the federal expenditures of 4 trillion in a country that is 100% honest, which doesn't exist, but the 4 trillion would go to all kinds of expenditures for wages and social security and for the military in a highly dishonest country. And the highly dishonest countries are all in Africa. You can read it in the corruption index. It's not published by me. It's published by some UN body. Anyway, in the most corrupt countries, maybe 50% is stolen. In some countries, probably 90%. The most honest countries, they have a theft rate of about 5%. I think the US is probably at a theft rate of 10% to 20%. So 10% on $4 trillion is $400 billion that is being stolen annually.
Interesting. And
by politicians. It doesn't go all in their pockets. It goes into bribes and lobbies and the defense industry and then. But that is in an honest country. If you look movies about the US in the 19th century, one thing that stands out, the villain is always the sheriff, or frequently the sheriff, or the judge in a small town and so forth. The country has been built up, has been told to be honest and decent and ethical and good, but in reality, it's never been that way.